Welcome to this week's MoneyFit Live webinar. The topic today is the credit score range. We're going to be talking about what the ranges are, what those ranges mean. You've heard good credit, excellent credit. What makes a credit score excellent? What is the level that you would consider a credit score to be poor or bad or just fair? That's what we're talking about today. Let's get right into the basics and start figuring out what a credit score is. What is the range? Which one of these is the range of a credit score, of your credit score? Do you know? You've got the 0 to 999, 280 to 850, a lot of 850s, 800s on the upper end, 200 to 300 range on the bottom. Maybe that's what it is. The reality is there's no one right answer. There are very common credit scores, but there are over 1,000 credit scoring models in this country alone. So you can't say your credit score, if you just say credit score, that's too generic. You have to specify which credit score it is. But of all credit scores, there are two that are by far the most common scores. And one of them, in fact, is virtually a monopoly when it comes to actual decision-making by lenders. About the one that has the monopoly on it is involved in about 90% of all credit-based decisions in this country. So which of these is the most common? It is the 300 to 850. That is both the FICO and the Vantage score. The FICO being the monopoly, Vantage score being the biggest competitor, and we'll talk about where you'll find those and what each of them have, kind of where they're used most. As I mentioned, there are over 1,000 scoring models. These are just a few samples. Some will go 0 to 100 or 0 to 1,000. You can just pick two random numbers, put them together between 0 and 1,000, and I would bet you there is a credit scoring model fairly close to that range that you just picked. These, why are there so many? Why can't they just pick one? Like I say, in a number of reasons, for a number of scenarios, like why are there three major consumer reporting agencies or credit bureaus and not just one? There are multiple credit scoring models because each company either believes they can do a better job than others, or they need to have it customized for their system. Whatever it is, they need something a little different. Every business is going to be different. And that's a key, because a lot of people think about the credit scoring models and they're upset that they're not simpler and easier to use, but it's not meant, and never has been meant, for consumers. Credit scores are all about the lender, typically lender, insurance company, but the business. And the purpose of the score. Let's get into the most common score, FICO, and we'll get to the purpose of the score, what it is, because it's not. If you don't like the way that they've set it up, I understand. I'm not a lender. I would rather make it really easy, but the whole purpose of the credit score is not for our use or for our decisions as consumers. It is for lenders. There's good reason for that, and there's a good reason that we shouldn't stress about it or shouldn't worry about it, but we should focus on different things rather than the score. Okay, FICO. FICO is I mentioned the monopoly. It's been around. The company's been around since about 1956. It was around by the name. It was set up by the as Fair Isaac, I think, and Associates originally. Although you won't find that even on FICO's timeline. But literally back in 1956, a couple of I think they were Stanford University. They're related somehow to the Stanford University students or faculty. I think they were both students, but Mr. Bill Fair, who was a mathematician an engineer, and Earl Isaac, mathematician, they got together and they formed this data analytics company figured out that if you could analyze enough data, you can start predicting things, and the data would start revealing important truths about your business or about your processes. So that was 1956. That was a big year. And then 1958 was the year that they introduced, so 2 years later, they introduced their first credit score for investments. It wasn't for lending, for investments. And then it took them 14 years after that to actually come up with an automated credit score. It was released in 1972 built for Wells Fargo. They're both based in the Bay Area, so that makes sense. The idea being, we're going to produce this scoring model. The bank, you funnel all your data in through this model, and it spits out a number on the other end that tells you how likely, tries to predict, it's not perfect, but tries to predict how likely that consumer is to pay their bills on time and as agreed, or default or miss payments. 1991, it was only 91 that FICO became available through all three of the major consumer reporting agencies, Equifax, Experian, and TransUnion. And then in 1995, less than 3 decades ago, is when FICO became the recommended scoring system for HUD-based or Freddie Mac, Fannie Mae mortgage loans. A lot of people think, they've been around since for 70 years almost, but it's really not been that long since FICO has been really the score to use in all lending processes. What is VantageScore? Now, VantageScore is the only major competitor to FICO, and it's, as far as its usage in lending processes, still very much a one-sided, lopsided in the favor of FICO. But VantageScore was introduced back in 2006 by the three main consumer reporting agencies, again, Equifax, Experian, and TransUnion. Not surprisingly, their thinking was, let's introduce, instead of having to pay, maybe we can introduce a score that can compete with FICO to offer to the U.S. consumers. So it was a joint effort by those three companies. This is the VantageScore is what you get if you are getting a free credit score, almost guaranteed. There's only one, maybe two different organizations. I think one of them is a credit card company that offers a free FICO score, even though that is not really the FICO score that most lenders use. But if you're going to any source and you're getting a free credit score, chances are almost guaranteed that it's going to be a VantageScore, probably 3.0 or 4.0. It's not used by many lenders do use it, but it's not the sole basis like FICO can be. Okay, originally the VantageScore, when it was introduced back in 2006 and all the way for the next 6-7 years, it was targeting the U.S. consumer. In fact, it was shown, it showed up as a score just like you would get in your school, an A, B, C, D, or F. And even then, it just seemed like that we couldn't get it right, because it wouldn't go 900 to 999, or it couldn't go 90 to 99, just like a general scoring percentages. It would go 900 to 990 was the A. So where's the score between 991 and 999? I know there's a reason for it. And the creators of this score are going to argue with me, well, this is why we did it. The reality is, if you're going to make it look like it's a grade so that it's easier for consumers and even lenders to figure it out, just go all the way with it. It didn't work out. Finally, with the 3.0 version of VantageScore, they decided let's just change it. And this was 2013. We'll just change it so it's going to be virtually identical in the range to the FICO score, the 300 to 850. And what is considered, your range is, your score is going to vary between your Vantage score and the FICO score because they look at different things or they weight different parts of your credit history differently. So even though the range is the same, scoring is going to look different from one to the next. So let's go through what is good credit, what is bad credit score, what's a great credit score. I get this question all the time. What is a good credit score? What score should I work for? And I'm just going to say this: stop focusing on your score. Stop focusing on your score. If you focus on your credit history, your score will automatically join along and improve. If you improve your credit history, your credit report, your score will improve. Your score is based 100% on what is on your credit report. So clean up, fix, build your credit history, your credit report, and your score will improve. The reason I get so, I'm not flustered, what I get so frustrated with this is, as people ask me this, I know that many of those people are the same ones that are going to turn around and they're going to go to a credit repair agency and pay them $500, $1,000, $2,000 to fix their credit score. And it might, or they may or may not see progress, and yet that's usually a temporary fix. It is an artificial fix, and that credit score artificially reflects or inaccurately reflects the risk that person is to the lender. That person, they might get a better loan initially, but what happens to the rest of us? That person, since it's an artificial score, that means that they're more likely to default than what the reality should be. And when they do default, guess who it hurts? Yeah, it hurts directly the lender. Who does it hurt indirectly? The rest of us. So please don't focus on your credit score. Focus on building your credit report and your credit history. Okay, so what is a good credit score? Let's go ahead and answer this anyway. Guess what? There is no answer. Is it a good credit score? Is it 690? Is it 720? Is it 760? Pick a number. And out there will be some lender that says that's a good credit score. It's not up to you. It's not up to me. It's not up to anybody that to determine what a good credit score is, except the individual lending company that you are asking, do I have a good credit score? They pick and they decide. And what makes a good credit score? Whatever they decide is a low enough risk to offer you their best interest rates, their best terms. That's a good credit score. A good credit score is just going to get you the best interest rates and the best repayment terms on a loan with a specific lender. So, do any of these numbers mean anything? Yes, they do. The 690 generally will get you the best interest rates with a HUD-based or HUD-backed, federally backed mortgage lender, like the Fannie Mae that we talked about earlier. Typically, you're going to get at a 690 or above, you're going to get the best interest rates that they have to offer. Other lenders will go as low as 720. Most lenders will only give their best interest rates, most, not all, and it'll vary, but most it'll be in the 760 range on up. So anything above 760, typically, to 800 or 850 is really not going to get you any additional benefits. The only thing in 850, and there are people out there, they're 850ers that are consumed, they are fixated on getting an 850 score. So FICO has a forum that you can learn a lot about your FICO score if you want to join that forum. There are people on the FICO score that are focused on getting an 850. The only thing an 850 gets you is bragging rights. That's it. You're not going to qualify for any better terms than you would if you only had a 760 or 780. So again, don't focus on the score, just focus on building good credit. And there are other webinars I've got at moneyfit.org/academy or moneyfit.org/courses go and check some of our courses and materials out there to learn more about the credit score. Okay, it's going to be very similar, of course, similar answer to what is a bad credit score. 300, of course, the very lowest point on the spectrum. Can you get a 300? Theoretically, I would assume there are people out there that have a 300 credit score. About the lowest I've seen on a FICO score. Now, again, FICO and Vantage score are going to be a little different. Vantage scores, I have seen Vantage scores in the low 400s, even upper 300s. It's hard. It's really hard to get a FICO score below about 490, unless you are filing multiple bankruptcies every few years. But 490, when I've been working with people who have gone through bankruptcy, that's typically where on the low range where their score might end up. If they went into bankruptcy already with a bad score, they might end up in the 490 range, 480 maybe. Most bankruptcy people who go through bankruptcy are going to end up with a credit score in the 500 to 515 range. But some lenders, they're not going to give you, they're not going to lend to you. That's pretty much what a bad credit score is. You won't even get a loan from that lender. They consider you, if you have, let's say, a 490 or 515 or 600, whatever it is, pick the number. If they're not going to lend to you, that means that they consider your score to be bad credit. Most lenders are going to loan to people with 670s and above. Even many will loan if you have a 600 or even in the upper 500s. It's called subprime. It's going to vary from lender to lender, though, how far down they go. Why does it vary? Because each company has set their own level of risk tolerance. Some are willing to lend to people with very bad credit scores because they are going to charge higher interest rates and hopefully earn a higher rate of return because they're taking a greater risk. Don't blame them. Hey, you should be charging so much. They're taking a much higher risk by lending to people with lower credit scores. That's what the lower credit score says. It says, I am more of a risk. It doesn't matter why. It says, I am at a level and I'm at a position in my life where I am very unlikely to be able to pay back as agreed, whether it's because of medical debts, whether it's because of irresponsibility. It doesn't really matter. The fact is, at low credit scores, you're going to default. You're highly likely to default. And so businesses that choose to lend are taking a huge risk, and risk is always tied to reward. And so if they take the huge risk, they're going to charge higher interest rates because that's the reward for taking the risk. You don't want them to loan. They won't take the reward, take the risk. They won't get the reward. Then there's no opportunities, period, for anybody to borrow money at those low credit scores. So here, I got this. I just Googled a variety. What are the different credit scores ranges, and what's good credit score? And you can see they don't even call them the same. Some of them have 5 or 6 or 8 different types of titles for good credit or very good credit or fair or excellent, or just average, above average. There is no consensus about what is excellent credit. Again, it's based on what the individual lender decides. Yes, you can guarantee, I can guarantee you that if you're in the 300s, you are going to be considered to have terrible credit, even 400s. But it's when you get into the 500s that you're not, there are some lenders that will decide that you are bad risk, but enough that not so bad that they aren't willing to lend to you. It just depends on the lender. If you want to look at this more, you can of course do an internet search yourself, or just pause this when you get a moment and or revisit this, and you can look more at these types of informations. I included the source in each graphic. Okay, what's the purpose of good interest? If you have a good credit score, you are going to get a lower interest rate on your loan. That's the number one benefit to building a good credit score. You are less of a risk. And so that lender is, since they're not taking a great risk, they should not expect that great of a reward for interest. And so their interest rates are going to be relatively low. The same thing can be thought of when it comes to insurance. And if you are not sure why your credit score is tied to your insurance premiums, check out my webinar from May 2020 on your credit and your car insurance premium. You can go to moneyfit.org/live, and there's a link there to previous webinars, and you'll be able to find my webinar from early May 2020, explaining why or how your insurance credit score is tied to your insurance premium. But the better your credit score, the lower your monthly premium will be. If you have a good credit score, you're much more likely to qualify for apartment applications. There are many apartments that if you don't have a certain score, let's say a 7 or 680 or a 690 or a 650, they'll tell you don't even bother to apply. They'll just dismiss your application out of hand. How do you know if they're going to check your credit? They actually have to get your signature or your permission on a separate piece of paper or a separate form, a separate screen. It can't be hidden in a checkbox, hidden in all these other forms. You have to give them permission to check your credit. But if you're wondering, call the apartment before you apply and before you pay the application fee. Ask them, do you have a credit score range requirement? And they'll tell you. They should just tell you, yeah, if it's not this, then we just decline it. Save yourself some money and application fees by checking or calling around. Okay, so how do you build your credit? What the credit is, it's not a snapshot. A lot of people misunderstand. They think that if they pay off their debts, and maybe they had a bunch of collections there, if they can just pay them off, now they have good credit. No, good. That's a snap. They're thinking in the snapshot terms. Whatever my situation is today, that's what my credit is, and that's incorrect. Because the scores are trying to predict future behavior, the best predictor of future behavior is past behavior, not current situation, but past behavior. Whatever we've done in the past, particularly recent past, is the best predictor of what we're going to do in the future. So your score is based on patterns of behavior. Long-term patterns of behavior is what you need to develop in order to build a good credit score. First thing, pay your bills on time every time, especially your credit card bills. Most bills don't get reported to the credit bureaus like utilities. They can. You want to go to Experian and sign up for their free Boost program. They can take into account your utility payments, and it's free. It doesn't work for everybody. I tried it. It just doesn't connect to my small credit union that we use for banking. But it works for a lot of people. I've talked to people who it's boosted their score 15, 20%. That's 3 to 4% immediately. But pay your bills, pay your credit bills, your statements, credit cards, store cards, car loans, home loans, student loans. Pay your bill on time every time. That is the number one most important thing to building a good credit score. After that, keep your balances at zero or near zero, or pay them down as fast as you can. This is the second biggest part, for talking in general terms, second biggest factor in your credit score is your balance as it's compared to your limits for credit cards. For example, if you have a $2,000 credit card limit and you are at $1,000, you have a 50% utilization. You're using half of it. You want to keep it as close to zero as possible. If anybody ever tells you you're supposed to carry a balance on your credit card, please unfriend them. No, I'm not saying personally. Just, that is bad advice. Do not carry a balance. You don't have to carry a balance. You can buy a stick of gum once a month with your credit card, pay it off, and you could build excellent credit. Are you going to be able to build at 850? Maybe not. But remember, you're not looking for bragging rights. You're looking for just the best interest rates you can get on a home loan. So just pay off your debt, pay off your balance every month, and pay your balances down as quickly as you can. And then minimize your application activities. Don't apply for a lot of new credit in a short period of time. That includes store credits, store credit cards. That includes credit cards. That includes car loans and home loans, personal loans. Try and keep it to 1 to 3 loans at the max every year. Most of the time, that's not really going to affect your credit score at all. But in general, you can consider that every time you apply for a loan, it's going to drop your score 1 to 2%. That's not a big deal. If you're at like 100%, that's drop if you only do it 3 times a year, that's 3 to 6%. That's not a big deal. But if you're at, let's say if like great school grades, if you're at a 92%, 93%, a low A minus, and you dropped your score 3 to 6 points, you're now in the B plus territory. You're going to get different interest rates offers on your scores, on your loans. So it does matter. Just try and minimize it. If you don't need a loan, don't go out and borrow or apply for a loan. If you're building your credit, if you need to build your credit in advance of a home loan, again, go to our website, moneyfit.org/academy. You'll find a lot of great resources on how to build your credit from scratch or how to rebuild your credit if you've got bad credit. A lot of things you can do actually don't even involve using credit right up front or applying for credit in your own name. If you have found anything of value in this webinar, please consider clicking the like button and subscribe to our YouTube channel so you can be notified of any upcoming videos. We try to hold these webinars every Thursday at the same time, except on holidays, and so that you can be up to date on anything that happens with your credit or with budgeting or with spending behaviors or with getting out of debt. But not only that, liking it and subscribing also boosts the likelihood that these kind of webinars will show up when somebody is out there looking for budgeting or how to build credit, rather than them coming across some predatory lender that's trying to sell them something. Liking it, the more likes and subscriptions we have on our channel, the more likely this unbiased material will show up on higher on those kind of searches. So thank you for liking and subscribing. We appreciate that. If you have any questions, I am available at todd@moneyfit.org. My phone number is right there. Call me. I do answer my phone, 208-286-3283 during normal business hours. If you would like a certificate of completion for this webinar, just send me an email. And there at todd@moneyfit.org, and say certificate of, tell me what you want the certificate of completion for, that it's for the credit and credit score ranges webinar, and then include the password Ranger20, Ranger20. I don't really care if it's capitalized or not, but just include that and I will email you back out a certificate as needed. Thank you for joining me again, and I sure wish you all the best and hope you have a great day.